Hello and welcome to the day ahead. It is Thursday, May 26th. I'm Andrew Gagan. Well, the up and down momentum continues for global equities, with US markets closing the overnight session higher after minutes from the latest Fed meeting met expectations. All three of the majors were higher, though jitters over a slowing economy remain, with fears an overly aggressive tightening cycle could tip the US into recession. Well, stocks specifically, Tesla and Amazon were the breadwinners, providing the biggest boost with the S&P and Nasdaq, while department store giant Nordstrom surged on the back of its upbeat annual profit and revenue forecasts. Wendy's also jumping on the news one of its biggest shareholders was considering lobbying a takeover offer for the company. And chipmaker Nvidia shares tumbling in after-hours trade on the back of a disappointing second quarter outlook, as it braces for supply chain snags and slowing demand for chips used in gaming devices. From an analyst perspective, weaker graphic chips prices and lower discretionary spending amid high inflation are likely to pressure Nvidia's gaming business in the near term.
The gaming segment, I do think there is going to be an impact for them, at least in the second half and into 2023. I mean, there's no doubt there's no semiconductor company out there is immune to any type of potential recessionary concerns or even slowdown in terms of the macro economy. So that all has to get kind of fed into the all of these names, and we do think that's slowly kind of being felt through some multiple compression across the space, and you're probably going to see potentially some revised estimate reductions as we kind of flow through the next couple of quarters.
On the cards, with most policymakers saying it would be appropriate to raise interest rates in the States by another 50 basis points at both the June and July meetings, and it could tighten policy further if economic data warrants it. While several officials noted the data had begun to indicate inflation could stop getting worse, they agreed it was too early to be confident of any peak in prices. And the market is pricing in a more than 90% chance of a 50 basis point hike in June. All eyes now turn to tomorrow's PCE report, that is the Fed's preferred measure of inflation. Treasury yields were little changed after the release of those minutes, recovering from touching 6-week lows after durable goods orders missed estimates, signalling headwinds are already growing from rising rates and tighter financial conditions. Well, major currencies were weaker against the US dollar. Increasing risk aversion is benefiting safe haven currencies, with the Japanese yen and Swiss franc also appreciating. The Aussie dollar continues its gyrations, falling below 71 US cents. And the Kiwi dollar has stabilised following the RBNZ's 50 basis point rate hike yesterday. And the euro has lost ground, even though the ECB rhetoric is sounding more hawkish. In Germany, first quarter GDP finalised at 0.2% on the quarter, 4% annual growth, with weakness emerging in private consumption and government spending, while consumer confidence is near its pandemic low. And Bitcoin continuing to trade sideways, indicating a pause in bearish sentiment among traders. However, many altcoins are trading higher, pairing losses from last week. Overall, Bitcoin has delivered its 8th consecutive weekly loss for the first time in history. Well, the Australian share market is expected to build on yesterday's positive session. SPI futures currently up close to 0.2%, and global oil prices rising as data showed US crude stockpiles fell 1 million barrels last week. Brent crude up 0.4% to $114 a barrel. Iron ore futures price, that's up marginally to $133 a ton. Base metal prices were mostly weaker, although nickel bucked the trend, up close to 1%. And the gold futures price down 1% to $1,846 an ounce. Ahead today, a modest rise in equipment spending is forecast to see private new CAPEX spending lift for the first quarter, although wet weather and supply constraints are expected to impact estimates for future spending, particularly in construction. And stocks to keep an eye on today: James Hardie, Nufarm and Aristocrat, all trading ex-dividend. And that is your day ahead. See you again tomorrow.